Hey, what's going on, guys? This is going to be a scan for 1122. It's kind of a broader one, so bear with me. There's going to be a lot of names. Obviously, I'm going to gravitate towards certain names more so than others, specifically ones that I already have positions in that I'm swinging that I'd want to add into. Those are still going to be the main focus, and I think this week's going to be mainly SPY, right? I think I'm going to take like a shorter dated call, and I'll show that chart here in a second, but really going to use the market as a whole, right? And I would rather just trade an ETF if that's going to be the case. So either QQQ or SPY, and then rolling those profits. If I do, obviously make money on it, I want to roll those profits into some of these swings, especially if they're still lagging or if they're still kind of building out structure. I think that's the plan for me. But I do want to give like a broader kind of like outlook on some of these things, specifically in my short term kind of thing I have here. I mean, if you guys can't see, the first three are really centered around fintech. I did take SoFi on Friday. I don't know if I was like early to it, at least the move that I think could happen, but SQ and Affirm are all kind of set up the same way, and we might have an options trade on these. But I did start shares on SoFi. Roblox looks good. Amazon also looks good. So we'll talk about all those, but we'll just start kind of, from the top down, right? So coin, I've talked about this one for a long time. I probably should have taken this on Friday, but remember we wanted this kind of pullback down into this old high here, like right around 280, 285, and it helped out that there was a nice little gap here, right around 270, 350. We essentially pulled down into that. We got pretty close. We didn't necessarily fill it, but we bounced obviously and had a 2-day or a 1-day move. Really nice to get back above this gap here at 296. I should have taken this as like a Friday trade, but wasn't in my plan. I wanted to see it kind of base out over a day or two, and it really didn't do that. It had a 1-day pullback, kind of rallied after the second day. But now I'm kind of looking at this for it maybe to hold the top of this gap, and then maybe it can trade back towards the highs. So coin is going to be a focus, especially if Bitcoin kind of looks good here, which it's starting to sell off just a tad. So I would expect this to gap down just a tiny bit or open and flush down to that 296. So this could give an opportunity for that entry if it can pull back. Once again, hold 296. I would look for entry, and then target would be pretty simple. We'd just be looking for a move back towards these highs. I know I have this kind of in my long-term outlook here. I think there's potential to swing for 400, maybe even 420 for like the end of the year. But if we are going to take this, I think short-term contracts can move as well. Maybe like a 350 call. Target would obviously be 334, but it should move rather well even with a 350. 340, and I might swing some 400, 420s as well. But that's going to be one of the looks as well for this week coming up here. Just got to pull back, hold 296. That's going to be a solid one. Name is looking really good. Obviously, a market leader right now. But like I said, Bitcoin is starting to pull back just a little bit. I don't even have this thing charted as of right now, but it is starting to pull back a little bit. Where's my level? I know I had something here. There we go. We'll make that black. I mean, it hasn't really done anything in regards to it pulling back. It did retest the trendline breakout, but it really hasn't retested the all-time high breakout. So who knows? We could technically get that. It's starting to look a little toppish here, so we'll have to see where this ends up opening up and if this ends up changing structure, meaning if we get like a sell-off, we kind of break under these daily highs here. Do we get a lower high? Do we get a new higher high? And if it starts to look good, have some good volume behind it, and it starts pressing for a new higher high, I think that would be that prime opportunity to kind of soak into some coin, add in those longer dated cons, and ideally we're right around like 296 and or breaking this Friday high at 305. So those two could kind of mesh really well in terms of where each one are at, and kind of use those two together as a tandem to take coin calls, right? I think that'd be the best thing. Tesla now looks pretty good. I think it needs a little bit more downside, so this one isn't ready just yet. I know a lot of people have been asking me about this one. It's not ready yet, guys. Not quite there. I still think that this can push to this these highs up here at like where's it at? 384 and 414. So these old weekly highs up here. Still needs a little bit more of a pullback here. Once again, it's really healthy to see this. We are pulling back, as you guys should be able to tell now, on a low volume, right? We have a divergence here from the sell-off, and then this also matches really nicely here with the volume divergence as well, leading back not only into the retest of like this major weekly spot, right, which is clearly here on this weekly level, but also too, if you guys want to tie it in, into these EMAs, right? Now, EMAs aren't everything. If you guys were with me like on Thursday, Friday, you got to know these are subjective. It's not everything because you could have a picture perfect setup and it can turn out like Roku, right? I started my contracts on Roku off that same premise, right? Just kind of the pullback, if this will let me do it, right here, right? Remember it pulled back into the EMAs. Initially, this candle didn't look like this. We had a nice strong wick. And then what ended up happening was the following day, right? It just completely melted down on high volume. So we'll talk about this one in a second, but that's why it's really not smart to trade off the EMAs and use like a lot of subjective things to really formulate a thesis and take entries, especially being high. And, you know, these aren't really like, I wouldn't say high confidence, but like this is still high confidence, but just areas of like really thin volume, right? I mean, we're in a gap right here, so I wouldn't say it's not high confidence, but it's just not a highly liquid zone, right? That's kind of what I want to get at. I would rather take this off of a key objective level, right, where we can clearly use level 2. We can kind of see the tape at these spots. EMAs are just kind of not it. So we'll move on. You know, we'll touch on Roku, but we'll move on from that. And Tesla just needs a little bit more downside. Would love to see 299 to that 280 spot. I think we can swing for like 415, 420. I was looking at the 420 calls for like December 20th. They're not too badly priced, but that needs a little bit more room to simmer. Intel, right? Intel we've talked a lot about. This isn't a picture perfect chart by any means. I said this on Friday when I took this. Like, it doesn't have to be perfect, but I would have preferred to have seen it close over 24.59. It almost did it on Friday, but like the last 15 minutes of the day or whatever, I kind of sold it under for a close under. It is what it is. It's not that big of a deal. But if this ends up getting a continuation down, there's like a nice little spot here that I think this could kind of return back to. And it doesn't have to come all the way to the range bottom, right? I don't think it needs to come all the way back to 2198, but I think it can really start to pull back into this area here, right? I kind of have it marked by this gap, but we can just use this as like our general area. Actually, I'm going to go with the candle body here. This kind of range right here. Right, I think this would be a really good spot to like either take more ads and then wait for a weekly candle close underneath 24.59. But this is a good area where I think we can use definitive risk and kind of take ads into that gap. I don't think it needs to go much lower than that. And if it does, right, remember we have until June on these contracts. So if this candle, the next weekly candle, closes underneath, I would say like 23.32, and we're underneath obviously 24.59. I think I would close these out. But I did take 10 contract ad. I didn't add the full half that I previously had back into this when I trimmed. I think that would have been irresponsible, especially considering we didn't get the close, but we were kind of close enough, right? It made sense to add a little bit. But yeah, this chart still not quite ready to get that full half back. So we're just going to wait for that one. MU, probably, I think it's a make or break week, guys. I mean, we have NVIDIA reporting. I don't know, NVIDIA is kind of looking a little sketchy, guys. I think that this could really start to fail underneath this 139.80 level, right? It coincides with this gap here. I think if we fail under this, guys, I think this is going to be, I don't know. I really don't know. I think it's going to move back towards these like weekly highs up here. Don't know what that is. Oh, it's a hidden trend line. But yeah, this kind of like this lower high range here, obviously support, kind of a support here with that higher low. I think this could really easily fade back to 131. If we have a really bad report, guys, I could really see this thing liquidating down to like 116. I think we could literally get back to 116. But you know, at that case, I think if this starts to sell off, right, there could be, and I think you guys saw Chem talk about this, but with the names that have really led the market up, we could see a sense of dispersion where this name has kind of been used for all it could be, right? And a lot of the money that was put into NVIDIA, that black hole event that we saw, where all the volume, all the trading activity, flow, not everything was going into NVIDIA, could really see that start to get soaked out of that or pulled out of this name. And going into some of the lagging names, I think primarily like Intel, MU, TSM would be a good candidate. TXN would be another good one. So we could see this money start to fluctuate and return into some of the lagging names and kind of continue this semiconductor AI theme a little bit higher. But yeah, NVIDIA is going to be really big on Wednesday. That really dictates semis as a whole. But like I said, we could see some of that money go into these names here. And namely, right, I mean, MU's at a crazy spot. I would love to see a bounce off of this. I just think it's kind of risky to be adding into this gap. There's a reason I didn't take this trade. or add into my position on Friday, because I am a little worrisome about this gap here. I mean, obviously, if we break under 95, I'm going to close these out, guys. There's no point. At that point, I think we could even trade even lower down into this 81.50 spot. And I did say right a long time ago, if we start to crack this gap at 95, I'm just going to get out of this one and reload at 81. And I'd probably take super heavy shares, right? Heavy shares, try to get back up to that 127. I still think that that's a valid target. I still think that's going to happen, but it doesn't make sense to just keep adding into this position. I would just rather close, get a bigger position in equity or shares, and that would be a 56% move. And I'd probably, like I said, I want to get about 30 grand into this, so I'd probably just take that via shares as opposed to options. But yeah, guys, we need a big bounce here. If we can just get some kind of move back up and reclaim, I think this 105, 108 spot's really important. If we can catch like the top, pull back down to the bottom, hold the bottom, or get above that top part, hold the top. And I'm talking about this right here. This is a progression gap, right? And we can clearly see, I've talked about this. This coincides with multiple levels, right? We've talked about this spot here. I've just removed it off my chart because it lines up really nicely. But this earnings candle low, kind of the higher low, the lower high range, we've talked multiple times about this. But if we can just get back to that level, guys, excuse me, if we could just get back to that level, right, I think this is going to be a good add right in this range here. And yeah, I mean, I think that's where I would take my spot. Once again, we need this to confirm above this 114.80. We'll just round it to 115. And then from there, I think, it might base that and then be good to go. But yeah, this is it's going to be a big week here for semis and MU. So we'll see what ends up happening with that. What else? Roku. Big spot here. Like I said, I took ads off that EMA. Should I have done it? No. Did it make sense to at the time? Kind of, right? We've seen a lot of these names do this, where we just kind of pull back into the EMAs and it rips, and I've kind of missed the rally. So I took those 5 cons off of that EMA. We had an initially good start. It wasn't too bad. I think I was like 10, 12%. Because this candle didn't look like this. It had a pretty good move back up to the highs. We almost closed, and it didn't close necessarily. Actually, I do think it almost closed in a hammer. I think it was like a really bad sell-off. Yeah, towards the end of the day, like right here, right? You guys can see it. So it was technically almost a hammer, and then just crazy sell-off end of day, and then we had a big sell-off here towards or at the open on Friday, which is just a shame. But yeah, this candle did have a really good potential close. Just sold off, like I said, but it's all good. This pulled right back down into this earnings candle high, so this is our footprint candle. It's you can either take it off of the open here, which is the true gap, or you can take it off of potentially the wick. I mean, it's only it's not that much of a difference, if I'm being honest. I think though it's 68. So it's not big at all, 75 cents. So whatever, it might work off either one, but I'm going to keep it off of the open here, or the full candle, the gap, if you will. And really, if I can add like another 15 contracts, I think my cost basis should be pretty well mitigated. I don't know what the contracts are right now. They're like 2.64. Yeah, so that's not too crazy. I can definitely take an ad on this one and get back to like 3. So it'd only be down like a couple percent. We're really just hoping this ends up catching here. Look for some kind of trend back out, and ideally, right, this is an area that we've talked about. It's being absorbed for sure. I mean, we saw sellers once again able to defend this and hold it off, and we ended up getting a nice sell. But if we can get back above, once again, this is a path of least resistance type trade, and we've talked about the Wyckoff accumulation on this for multiple weeks now. This name looks a lot like Shop. It looks a lot like SoFi, right? All these names kind of have the same look, and this one's really simple with the absorbed supply here at 78.61. So it's just about catching the right spot, and then ideally getting that markup through that level, and then a reclaim of it, pull back. We can maybe add some more on rolls, and then looking for the finish to 91, right? But yeah, this could even be a share one as well. I might take some shares off 68 here, and then really the risk is pretty simple. I've talked about this one. For a swing specifically, and if I take shares again, it would be underneath 60, right? This footprint candle, earnings candle low is a really great spot to risk. If we draw like a risk to reward perspective on this, right? It's not snapping. I keep hiccuping, guys. I did a run today, and my body's not feeling right. Yeah, it's right around a 3R, so that's a really good trade there. In my opinion, anything over a 2.5 is pretty solid. So I think that would be a great spot. We'll just have to see where this ends up opening on Monday. Now Oxy too. Oxy's a pretty crazy one. just really been stuck against 49.91, right? I mean, if you guys look at this from a VPA perspective, this stock right here should have lifted off after the sweep candle from earnings or the post earnings day, right? Because remember, we opened and we sold all day underneath this spot, really swept out any potential buyers. And having, I talk about this a lot. There's a ton of buyers, ton of liquidity here at 49.91. Those guys are probably putting their stop losses like maybe, I don't know, percent underneath, 2% underneath, and this swept out a pretty steep amount of people, man. I mean, a lot of people I think got stopped out of this move. It was right around a 3% drop underneath that low, and I think all these orders were getting absorbed right as people were getting stopped. Obviously, had a huge candle close, a lot of volume here as well. I mean, this is the same volume that started this move up for that lower high, and I thought we'd have a continuation. I mean, we kind of got one, sold right back to 49.91, and then now we closed on 49.91. I'm still expecting a big move on this one, so I'm just waiting to see if we can maybe open around 49.91 again, maybe take ads through Friday's high. So adding a little bit more into strength rather than adding with our back against the wall at 49.91. Those contracts too have a plenty of time into March to give time for policy to be talked about. We've talked about this one a lot, and kind of just seeing what could happen in the Trump administration. And it gives plenty of time for the inauguration for things to kind of take into effect as well. So just being smart with ads on this one, but I definitely think that our eyes should still stay on Oxy. I haven't looked at ZOM. ZOM did kind of crack that risk. So, I mean, Oxy is definitely the better chart as of right now. So we'll have to see where this opens. And yeah, just be smart with this one. All right, I'm going to take a quick break now. So that's all the old stuff, or kind of like the longer term stuff, the stuff I currently have, stuff I'm looking to add into, minus Tesla and Coin, which are long-term names that I'm looking to add on further pullback. But most of this has been covered already, or stuff I've already talked about, so that should be familiar. It's about 16 minutes. We'll try to get you out of here in like another 5 to 6, right? I'll go over the next ones after a quick cut. All right, so definitely a kind of like a theme here with fintech. If you guys don't know, like SQ, SoFi, Affirm, all kind of look the same. There's a reason I took shares of SoFi on Friday. The only reason I took shares and I didn't take options is that we're pretty freaking high up, right? I think it's kind of risky to be taking calls that high. But I mean, we kind of saw the same thing play out with UPST, where we had this like multi-week, year-long base. Obviously, we had a pop back here in July of 23, but we kind of had the same lower high or like weekly high range up here, right around 48.54. Namely, we had like this gap here as well, but kind of the same structure, and then we ended up having a breakout, a 2-week pullback, and then a massive rip. SoFi kind of has that same look. Obviously, it didn't necessarily pull back onto the weekly highs here, but we did break out above these old 2021 highs, right? Or I'm sorry, lows. So we're reclaiming old support, and we're getting it as support again. Weekly, right, is a little bit different, where we have this doji, which is pretty neutral, increasing on volume. But if we take a look, a lot of that volume wasn't really selling. It was the gap up, right? And then we've been pulling back on diverging volume since, right? And we pulled back into that old weekly low, which is that weekly support that we reclaimed, and kind of got pretty damn close. Like I would say maybe like 2 cents off from filling the gap here. So really good risk reward chart. Like I said, we're really high up, so that's the reason I took shares instead of like an options trade. But yeah, has good potential to trade back up to 1447 or 1444, which is this high from Monday. And normally these will trade to a whole number, right? So 15 would be kind of the mark here, where I'm expecting to have a push. So right around like 14% on the underlying, and I'd be happy with that one. Maybe keep a couple shares left over just to see if we can push like 15.50, 16 bucks, etc. But 15 is pretty much the target on that one. Now, if we take a look at SQ, remember I kind of talked about how a lot of these names are shaping up specific ways. This one, very similar. We have this multi-year, multi-week-long base with a pretty clear resistance here at like 87.56. So if we draw this in like red, you guys will clearly see it when I go to the daily. But yeah, if we could look from like the weekly close here to the weekly open, kind of just like a range where we couldn't get above. Same thing happened here on this weekly range. Weekly range here that couldn't get above. And then we broke out through, right? And I'll show you guys what this little mark is here that I have highlighted in black. I'll show you guys in just a second, but clearly it rejected again, right? So hey, maybe this makes a new low, maybe it starts to sell. Not quite, right? It's kind of similar to a lot of the other names that I showed you. SoFi, what UPST did, where it rejected on low volume, which is really important for this the shooting star candle, right? And it's starting to sell on lower volume. And what I have marked is a progression gap, right? Progression gaps, I always tell you guys to kind of keep these on your chart, because a lot of the times what you'll see is a breakout through it, or an imbalance candle maybe, or a gap up above, and a pullback and a reclaim of that spot, and it holds as support, right? Which will then take us higher, and usually through the resistance that ended up rejecting it in the first place. Same thing here, right, where we have this progression gap from 81.50, or technically it's 81.46, down to 79.57. I could see maybe like one more day, 2 more days of pullback, and this would be the perfect entry in my opinion. Or if we see a continuation through Friday's high, so let's say it starts to kind of push out and break out, I think it's really important to just be patient and let this one get above 87.56. If it can do that, I mean, we have a multi-week, year-long resistance now claimed. Give it a couple days of digestion and some kind of pullback on diverging volume. Let it hold, and then I think this has a week, month-long rally, right? Weekly, monthly-long rally, where we can definitely have a bigger push, maybe up to like 120. I don't even know. Maybe we can get back up to these lower highs up here, like a 150. But I think this name is setting up really, really big, considering how long this base has been building out. So SoFi is definitely on watch for like some kind of pullback or a breakout and hold over 87.50. Affirm, kind of the same thing, not as pretty though. I mean, once again, very, very similar. We have this high here. We ended up kind of trickling above it here back in like January. We sold underneath. We came back down to the bottom of this range, which was these previous lower highs. If I show you guys on the daily really quickly, right, you guys will see this kind of pulled back here, right? This was an old high that broke out. It just slowly pulled back into it, kind of swept under on the monthly, ripped back above. We were starting to make higher lows against this level, and really just kind of had like a squeeze out, if you will. Obviously news helps out with that as well, but now we're back above this main high here, and we have an opportunity to pull back into 52.48, right? And it's kind of doing the same exact thing. All of them are. There's a reason I'm watching these. Pulled back on low vol, and then we had a high volume push on Friday, right? So if we can get like a continuation back through Friday's high, I think these can push to like 59.60. They might be good for like a weekly contract. I will say Affirm is probably my least favorite one from a risk reward perspective. So there's a reason I took SoFi. There's a reason I'm watching SQ. So if I was going to do anything, I'd probably delete Affirm, right? Just delete Affirm. I just wanted to put it out there because all of them look the same. It's your guys' choice on what you want to take. But if I had to choose, it'd be between SoFi, which I already have shares on, or SQ, right? If we can pull back a little bit deeper into the progression gap, or we break in base 87.56. Cool. I just wanted to kind of go over that real quick. Kind of just a process of elimination. One of them looks way better, or I guess two of them look way better than the other. And then, actually, we'll go over SPY last. Roblox here. Could be nice, right? Roblox, obviously, kind of the same exact setup as a lot of these other names. Once again, massive base here, gap up here. I'll change my colors back here soon. Yeah, so gap is at like 56 and it goes to 66. Clearly rejecting once again. Kind of this high here at 53.23, which are these weekly highs, clear resistance. Maybe it pulls back, right? I could see this pulling back to not only 48, which is that gap, but if we take a look at this whole range here, like 47.73 to 48, right? You guys can see multiple weekly highs that were resistance. If it can pull back, I think that's a prime spot to go long. I wasn't going to buy the breakout, right? I always like to buy the pullbacks. And if we take a look, right, I mean, this is pretty simple. I mean, this would be a peg, right? So defending the earnings gap that occurred here on Thursday, the 31st. We'd want to see this sell down and buyers defend the spot, which lines and it perfectly coincides with 47.73, that 48 range. This chart is like a no-brainer, right? Especially considering how long this space is, the theme, everything aligns, right? So I think this could be a banger chart. Just got to have a couple more days, guys, a couple more days of selling. I think this will be perfect. So I have my alerts set, and I should probably make another one because I don't know if we'll get all the way down to 47.73. Probably just pull one here. Just literally grab the gap and mark that as Roblox calls, right? And then I'll look at it as it gets to that level. But Roblox is going to be a nice little focus as well. Obviously, if it starts to trickle down into the gap, starts to get a little bit gruesome, right? I think I would close this, or maybe I'd look for a sweep and give it like some time on my contracts. It's all it's situational. We'll have to see. Like, who knows? Maybe we gap down into this gap here and we push back above and reclaim 48. I would add and then risk wherever the low was in this gap. But we'll have to see. I'm kind of just playing out different things in my brain. Ideally, though, we get like a Tesla type thing, right, where we have similar to this, right? We have a peg, right? We kind of slip into the gap a little bit, we close back above, and it rips. Same thing I'm thinking of here. So Roblox, big watch here. Now Amazon, remember I said I'm going over a lot, guys, so bear with me. Not all of these I'm going to trade, so just keep this in mind. But Amazon is retesting this key 201.20, 200 level. Remember, we've had Bezos basically selling every share available at like 200, and we finally ripped through it. And then obviously we kind of, I would say we swept these highs here, where a lot of people were bullish on this breakout and might have gotten trapped on this weekly candle. So we ended up gapping down, so it did punish those buyers, and now we're pulling back down into 201, 200, and we saw a pretty high volume candle occur, right, with a nice little wick here. If we can open, I would say somewhere around the close and just consolidate here, like right around 201.20. I think this would be a good entry for a long backup to that gap, that like 211, 212. Right? Actually, we can get rid of this now because we just traded the gap. Yeah, right around 211.50. Remember, this gap technically starts right here, so like 206.76. So this could be a good trade, for a move back up to 211. If you're late on the party, maybe it ends up basing as it kind of breaks out here. Maybe it pulls back and it bases 206. You might be able to get a scalp up to like 211.50 to fill that gap, right? So could be a good trade on Amazon. Do I think I'll trade this one? If I'm being honest, no. I think there's something setting up, and this is the one I really wanted to go over was SPY, right? SPY, we had that insane print come through. Let me find it really quick for you guys. I should have been prepared and had it pulled up already. Here we go. So I talked about this a lot, right? And how this works is you got to think, right? When things are selling down and there's a good buying opportunity, specifically in gaps, if we see it's like sweep under a higher low, if we see it sweep underneath a current low with a lot of daily like equal lows against that, what we'll end up seeing is a lot of these dark pool prints come in right to the upside, meaning there's sell orders. And I guess I'll keep this on the screen. So you guys can see 593.5. There's somebody selling 70 whatever these are, prints worth 9.6 million or 136,000 shares, right? And what that means is they're lining up their sell orders at 593.7. Why would that happen? Why is that happening a day after? Well, it's pretty simple. As price is going down, right, these guys are simultaneously bidding, right? So we'll just kind of use a big yellow line here, right? As price is coming down and people are panic selling or whatever's happening, smart money is buying into this gap. They're buying, they're rebidding, which means they're putting new buy orders here, and they're buying up everybody's sells. And at the same exact time, what they're doing is they're building up a lot of their sell orders up here, right? In this gap here, maybe it's an old high, whatever it may be. And what ends up happening is market makers will then facilitate price towards either the highest buyer or the highest seller. Right, so as they're buying all this shit down here and price is moving towards these buyers, once they've had their fill and they've accumulated enough of the inventory to be able to control and dictate price, and they have enough premium, right, what they'll end up doing is they'll flip things. They'll say, hey, I want to sell up here, right, and they'll simultaneously start putting different orders to sell. So I'm sure they'd put some at like 589, 593 is that big one, but then what we'll end up seeing is price get walked down, and then you'll start to see a trend back out towards those sell orders, right? And price will move towards those sellers. It'll fill out those sellers. The market's balanced, et cetera, right? And that's kind of what we watch all the time, and it tends to happen like during big news weeks. We don't really have a lot this week, if I'm being completely honest, but we are selling into a gap here. If we take a look for this week, I mean, all we really have coming up, let's see. What is this week? The 22nd? Yeah, we don't really have anything, guys. So no news this week, so I would expect maybe a slow drip down into 576. But yeah, they are setting up an accumulation. So I did say to everybody, like, hey, if you want to take the potential call side here for like a potential gap trap here, because it obviously slipped into the gap a little bit, closed back above, you could get some kind of a outlier move up to 593. Is it likely? Yeah, it could happen. I would say it's quite probable, but the risk to reward isn't as good, right? If we take a look at this, if you just went long here, you'd have to risk, right? Because it's still technically bullish down into this gap. If you took it there and you ended up trading it to there, that's not even a 1RR, right? You don't want to risk $100 to make $100. Whereas if you just wait and you're okay missing this trade and you can get like an entry down here, maybe risk the bottom of this breakout candle there, and then you can target that 593 spot. It becomes a little bit more lucrative. Risk to reward kind of pushes out to like a 2.84, maybe like a 3. That's a lot better, right? So I would prefer a slow drip down this entire week, sell the 576, fill the gap, and then I can risk probably, the bottom of that Tuesday candle, which started that gap up day. And yeah, this is kind of what I'm expecting. I'm expecting a slow drip down. They accumulate each new low. Once we hit 576, I would expect some kind of footprint candle, which I'm going to be looking for. I'm not going to explain a footprint candle. I talk about it all the time. But yeah, footprint candle off 576, and then I would be looking to get an entry on that. And then ideally, we start to mark back up towards those sell side prints, right? And should see a nice little trend back up to that. Pretty easy reclaims of levels too. So if you guys missed the trade, I mean, I would say right here is a pretty easy spot, right? The reclaim of the gap high, right? And then that would probably be your last opportunity to get in. Maybe if it doesn't reclaim that, we could always take maybe like a high tight flag. So let's say it breaks down, pushes up and rejects this spot, high tight flag, that could be an entry. And the rebase of this, or a break and base, and then look for a push to 593. But this may be the last dip, guys, if I'm being honest, going into the end of year. So really big opportunity. The one thing that's on my mind that I'm a little bit worried about is this 561 print that we never tagged. I think that'd be a pretty steep sell-off. I don't know if that would necessarily happen. But yeah, I mean, that's still in the back of my mind. I think that will happen post-election or post-inauguration, if I'm being honest, and kind of into 2025. So I still have this marked, but I'm not going to think about it too much, right? I mean, risk to reward at 576 is fantastic. If it ends up slipping under this and it starts to trade to 561, just got to be okay with taking the loss on that one. It's just kind of an outlier or anomaly move. But yeah, can't ignore this, guys. I mean, I've seen this happens so many times, and I'm not saying it's like a perfect system, but that's why it's so important to have different check marks that make you or make the trade really kind of stand out, right? And I always look at gaps. I look at higher lows, lower lows, and if they're sweeping a specific level, are they accumulating into a gap? Is it, kind of where is the volume kind of kicking in? Obviously, we saw volume happening a ton here on this gap breach at 585. Good buyers stepped in. I think it was towards the end of day, if I'm not wrong. Yeah, so towards the end of day, specifically that last hourly candle, which is always a little bit of grain of salt on an OPEX, but yeah, I mean, we can clearly see that this could be an accumulation play. I don't know if it's necessarily a 3 lower low, but I'm just going to be watching this kind of going into that 576 spot. And I think if this is the, what am I trying to say? If this is like the setup that I think it could be, I would rather take this one over like Amazon. I would rather take this over like SQ. I think I would just focus on this one. Take profits on this one, ideally back at like 593, and then roll those into like MU, Intel, whatever I end up taking, and kind of using those as my buffer into my swings. So that's pretty much going to be it, guys. I covered a lot today. If there's going to be one thing I trade, I think it's probably going to be SPY. I might just sit here all week, if I'm being honest, and just wait for it to do this, right? Kind of sell into 576. Remember, it's important. I'm not going to just take it when it hits 576. I have to see a footprint candle kind of occur on the daily that gives me an indication, hey, this is probably the last big buy order before they mark price back up and start looking to sell at 593. And then price will obviously have a trajectory up. And if I miss the entry here, it's important to understand that the high tight flag is a good entry, the break and base is a good entry, and it doesn't mean that you missed it, okay? But yeah, that's pretty much it, guys. Try not to cut this up as much as I typically do. I usually edit it a lot. I just wanted to go with like a free-flowing kind of chart analysis. I've talked about all the long-term stuff of my swings and what I currently have on top of what I'm planning to add with Tesla and Coin. And then short-term stuff, just kind of talked about it. Doesn't mean I'm necessarily going to take it, but there's obviously a theme that's glaring right in our faces. I think that obviously between crypto, a lot of the names that are in ARKK, as well as the fintech kind of names as of right now. But yeah, big week here. Not a lot of data, so that's really important to understand that there's not going to be that volatility driver. There shouldn't be a lot of gap ups or anything like that, so it should be pretty safe to swing things if necessary, or add into swings on weakness, because it shouldn't be that aggressive. If we get a push up or down, things should just slowly drip, as I said. And then making our way end of November, right, things start to kind of amplify because we're starting to have holidays kick in now. So things are going to start accumulating or distributing much, much quicker because there's less time. And we're going to start to see those flows kick back in. I talked about this. We have a small window of weakness again. But we're going against time too, so those windows of weakness should begin to get mitigated and small, right? And we're going to see that end of year rally get front ran. I think that's usually what happens around this time. So what might end up happening is like 1 week of like quick downside or that slow drip, as I said. And then once Thanksgiving comes around, going into the beginning of that first week of December, we're going to see new flows start to kick in, and I think we're going to see the end of year rally start to get front ran. End of November, early December, and then I think we're going to start seeing things kind of, I don't know, man. I don't want to say things fly, but I definitely think we're going to see some pretty crazy shit. So that's going to be all, guys. Long-winded, but I tried to break down as much as I could in a short period of time. This is like 18 minutes. This should be like a 30-minute video. Shouldn't be anything crazy. But all right, guys, I'll see you guys tomorrow. Yeah, just take this week light, man. Just be ready to add into swings, and if there's going to be a big day trade, it's going to be on SPY. So I'll see you guys bright and early tomorrow.